Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The euro declined versus the US dollar as Spanish bonds fell, causing 10-year yields to move to the highest level in 6 weeks, as a Eurozone report indicated the region's economy contracted in the third quarter, pushing it into recession. Greece has been given an additional 2 years to reach budget deficit goals for its bailout program. The US Treasury Secretary Timothy Geithner stated that he's confident that an agreement on avoiding the fiscal cliff can be concluded within weeks after White House discussions were held between President Barack Obama and leaders of the US Congress. Geithner says that a deal must be reached soon to prevent further damage to consumer confidence. The euro was last trading at 127.40, a decrease of minus 0.31%. The Japanese yen declined to its lowest level in more than 6 months versus the US dollar on speculation the Japanese elections to be held next month could result in the election of an opposition party that advocates more forceful monetary stimulus policy. The dollar increased on speculation that Barack Obama and congressional lawmakers will not be able to avoid the fiscal cliff, which is more than $600 billion of federal spending cuts and tax increases that will take place at the start of next year, unless Congress acts soon. A failure to reach an agreement risks pushing the US back into the recession. The yen was last trading at 81.30, an increase of 0.17%. The British pound declined against the euro and the dollar this week as the Bank of England reported that UK growth could remain slow, increasing speculation about further stimulus required to boost the economy. A report indicated that Britain's retail sales declined more last month than economists forecast, contributing to signs that the economy is struggling to recover. The pound was last trading at 158.82, an increase of 0.11%. In commodities, the oil price rose on concern that fighting between Israel and Hamas could escalate into a broader conflict that would threaten Middle East crude shipments. Oil was last trading at $86.92 a barrel, which is an increase of 1.22. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at UFX Markets for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.